Welcome to the Secure Transition Teleconference. I'm your host, Lee Beard. Before we get started, I have a note to the audience that you can email info@securetransition.com, that's info@securetransitionsingular.com, to request additional information about these topics. The same call-in number and access code that you use today can be used to listen to the replay. I'm very excited to have my special guest on this teleconference today, are Carl Grimes, a certified business intermediary from Lowell, Arkansas, who has helped hundreds of business owners with a profitable sale, and David Potts, a certified public accountant with many years of experience from Fort Smith, who is also accredited in business valuations. Welcome, gentlemen.
Morning, Lee.
Good morning.
Glad to have you. We have on the call also today business owners who have an interest to learn about how to value their business in today's market, what affects the value of their company, and how to increase the value of their business. We're going to do a fireside chat style today. So, Carl, I'm going to start with you. Tell us the number one question that a business owner asks when they begin to think about selling their business.
You know, Lee, we work with literally thousands of business owners yearly, and it just almost without fail, the first question that they'll ask us is, what is my business worth? And that's a question that everybody needs to have answered as soon as possible, but it's not a good thing to ask of a business broker. What you need to do is talk to a specialist, a professional, somebody who knows about valuing businesses. And quite frankly, we're very fortunate to have as a part of our team David Potts, who is not only a CPA, but he's a certified business appraiser. And David, can you kind of give us some tips about what these many thousands of people who need to know the value of their business, what they need to do?
Well, the reason that a person wants to consider a certified valuation professional, and my certification is accredited in business valuation, and it's the American Institute of Certified Public Accountants that stands behind that certification, is because of all the different ideas and misunderstandings of how much a business is worth. And when I talk to people, some industries have rules of thumb. Other people know that they had a friend in the same industry that sold for a multiple of earnings. And there's a lot of nuances in valuation that affect the end number, because a business doesn't just operate by itself. It operates in an economy. Sometimes it's up, sometimes it's down. It operates in industry. Sometimes it's a dying industry, and sometimes it's a growing industry. And things that also affect valuation that people don't think of is key employees. Yeah, let's say that you had land that wasn't used in the actual business that might add additional value, or you may not want to buy it, but that would be like an excess asset. And so you've got all of these little nuances that affect the value of your particular business. And probably the most sensitive thing that affects the value would be your growth over time and of your cash flows. Now, when I approach evaluation, we look at different approaches, which would be based on income. One will be on a market basis, which is basically where we look for other companies in the same industry that have sold to kind of compare. And so in those approaches, you've got different actual methods. But that's just the general approach and the way you do it. And the fact that rules of thumb can really throw you off, it's not the best way to set a value for a business.
You know, David, one of the things that I've run across is people really don't want to spend the money to get a professional valuation done because, they're like anything else. They cost money. But my experience has been that not having a professional valuation often is penny wise and pound foolish. I do remember a time when I had a company that was looking for a valuation for me to do, for them to help them sell, and I wasn't going to be the broker on it. I was just trying to help this company, and I used rules of thumb and the best information that I could find, and we came up with a value of that particular company at that time of about $340,000. And the people who were looking at buying the business decided not to buy it, and the owners thought the $340 was a pretty good price. So when they decided that buyer they had wasn't going to buy, they asked me to market the business, and I insisted that they have an independent third-party certified business appraisal because I knew it was important to have that. We sent it off, we got the appraisal back, and the appraisal came back at $740,000. Now, that tells you two things. One is, I'm not a business appraiser, and two, being penny wise and pound foolish can cost you $300,000. So that made quite an impression on me.
And on the other end, if you overprice one, it will sit there and buyers won't be interested because they have already an idea of what return they're going to require to buy a business, and they can tell when one's overpriced generally. You also might keep in mind we're coming up, if you read the articles about the number of people coming in that are, the baby boomers are retiring. Many of them are in business, and so they're going to have to start thinking about selling their business. What's going to happen is in the future we're going to have a buyer's market. Now, a valuation would also, it also works as a tool so that the buyer, if I'm coming in looking at buying a business and I have a third-party valuation, it's going to give me a little more confidence in what I'm buying. Somebody else besides myself has looked at it. And it also, because as a buyer, I'm going to have a certain, we'll just use the word fear, that I'm going to overpay for a business. Well, I believe, in my experience, that you can see where the buyers can, they get some confidence that they're paying a good price for the business because somebody outside of the transaction has evaluated it and determined the value. And one other thing, I'm talking from I'm a CPA as well as part of a business broker's team. And of course, I don't do the valuations myself normally inside for the business brokerage side because that third party eliminates a lot of bias. They don't have a dog in the fight. And the amount that you have to pay for a valuation generally will be returned to you many times over if you're in the position of having to sell your business.
David, you hit again on key points through that dialogue there. I will tell you that only as a business broker, professional business broker, having participated in over the sale of over 600 businesses, that only bad things happen to overpriced businesses. So having the valuation done before you get ready to go to the market just has so many advantages. Number one, if the sale of the business at the value of the business doesn't meet your needs, then you don't go to the market with it. What you do is you add value to it by working with your professional accountant, your marketing people, whoever it might be, to add value to that company. Okay, another thing that I really like about using a professional third-party certified business appraisal is that you can do good tax planning based on real numbers. Another great advantage that I've found in having the professional third-party certified business appraisal is that you can put a value on goodwill. And out of everything that we try to value as business intermediaries, goodwill is the hardest thing to do. And isn't that a part of your appraisals as a professional certified business appraiser, David?
Well, when you appraise a business, you're appraising it as a whole, and you're going to be looking at the cash flows. And when you basically when you do your valuation, you can allocate it back to the individual assets, and the difference actually turns out to be your intangible part, which would include goodwill. So you do, and just keep in mind, we're going into I just call it a hostile tax environment compared to what we've been in the past. And tax planning is going to take a more important role in the future in selling a business, and you're going to find that techniques like like-kind exchanges and maybe you'll be interested in installment sales again, which because of the environment we've had recently with the low capital gains rates, that in order to keep what you've generated and made in your business over all these years, good tax planning is going to be a significant part of reaping your reward when you sell your business.
Yeah, deal structure is a real key to that, and making it work for both the seller and the buyer, because you just have to be in a negotiation mindset, and having the touchstone of a good, solid, certified, professional third-party valuation gives you that touchstone where you know you've got a number on which you can deal with a buyer when it comes to negotiation. Yeah, and that's one of the things that I've found a good certified appraisal can do. Many times business owners think their business is worth more than it is to the open market. It's an unfortunate thing, but it's true. On rare occasions, you'll find business owners who think their businesses are worth less. But a good certified appraisal lets you know when you get a good offer. I don't know about you, when I get ready to buy or sell a car, I go to Kelley Blue Book. I look in there and find out, what's that make, model, and mileage? What is that worth? I wish we had a Kelley Blue Book for businesses. There is no such thing, because businesses are all individual, owned. They're individual drivers of value, so you can't go to Kelley Blue Book. You've got to have a professional valuation. That way, when an offer comes in, you can evaluate that offer against an objective third-party opinion, and you may not turn down that first offer, because that first offer may be the best one you ever see. But if you don't know the value, you don't know. Another thing we found, David, is that when you get ready to do a valuation, you have good organization of your records. And that's a key thing. Organizing and getting our records in order lets us know the weaknesses of a business before the buyer ever sees the business. And having things in good order is impressive to a buyer. They want to know that the owner is running the business properly, has good financial systems, so they can be comfortable that they're getting good information. And we don't want to try to, scramble around and look for P&Ls and balance sheets and verify what's on the balance sheet while we're in the middle of marketing the business, or even worse, when we have an offer. So good organization on the front end, working with a good appraiser, means that the seller's going to have things in order when he gets ready to go to market. And I think that's important. How about you, David?
Well, I think it is important not only from the buyer's perspective, and when we're talking about organization of records, let me take that a step further. The CPAs put out different levels of financial statements: compilation, review, and audit. Audit being the highest level of assurance that the numbers are correct. Now, depending on the size of your business, an audit is, if your business is such that it's going to be in that $1 million and up, audited financial statements are a great thing, especially if the buyer has to go to a bank and finance the transaction. And if an audit is they may not always be called for, but a reviewed financial statement or just a compiled, either one, the fact that you've got your CPA's name on the letterhead gives great confidence to the other parties of the transaction, the banker, the buyer, and if there's other outside investors. And so people underestimate the need for professionally prepared financial statements, and if they're going to be professionally prepared, it's going to be a lot more cost effective if you are organized in your business as far as your books and records.
David, having a good professional CPA on board with the business owner preparing to sell the business is absolutely critical. We recently sold a business here in out of our operation, and that business, as the owner was leaving due diligence with the buyer, the owner, as he was stepping out, told me, he said, my accountant told me that I could only sell my business for the depreciated value of the assets. He said, that's what it's worth. And the depreciated asset value of that particular business, which was fairly heavy in the automotive end, transportation end, was about $125,000. we sold that business for $450,000. And, of course, the seller was very anxious to go back and talk with his accountant. So having a good accountant that understands the process and understands the value of goodwill created over a period of time from the assets of that business as impressed through cash flow is really critical. You touched on something else, David. For the past 4 or 5 years, we were not able to get much third-party financing for business acquisitions. Banks would loan money to establish businesses, but if somebody wanted to buy a business, it just really, they weren't very open to it. But now the market is changing. We're beginning to see third-party lending come back into vogue again, where the Small Business Administration is guaranteeing loans for banks. Now, what that means is that the seller can get more cash if the buyer gets an SBA loan. And I can tell you that with the Small Business Administration guaranteed loans, they are going to require independent third-party certified business valuations if the loan amount is over $250,000. Now, most of the people we're going to be hearing from on these calls, their businesses are going to be worth considerably more than $250,000. And if that buyer is going to go get that money, we need to have the independent valuation in our hands so we know that it will support the loan that they're going to need, and we can then make that valuation available to the bank's to the lender, and that way the bank can then order an updated valuation from the certified appraiser. And by the way, they won't use an appraiser from a broker. They won't use an appraisal from a CPA who is not certified. So having this on the front end gives you confidence and the buyer confidence that when they go to the lender, they're going to be able to get the money that they want in order to get cashed out of a business.
And let me make one other point. I'm not sure whether I've made this yet, but I've seen, you got to remember, I've been a practicing CPA for over 30 years, and I've seen a lot of businesses sold. And sometimes people wait too long to sell their business. In other words, you know, you're going to get your top dollar when everything's going well. You're growing, strong cash flow, management team in place, and sometimes people wait and something happens in the industry, something happens to a key person, and then as things level off and maybe start to decline, they say, well, I need to go ahead and just sell this business. Well, you're not going to get near as much money as if you sell it when things are going good. And so you got to sometimes just look at where you are in life, and if you want the best payday, sometimes you might want to sell sooner than later. And you got to keep in mind, for most people, they've built their business over years. It's their major asset, and you've really just got one shot to get that payday and do things right. And that's the reason why you need to use a professional person who knows how to market and sell a business. That's why you need to have a third party business valuation. That's why you need to spend the time, effort, and money to work with the CPA to have excellent records. And because when it's said and done, hey, if you do it wrong the first time, there's generally not a second time.
You know, David, thanks for reminding me of a couple of things. One is the time that it takes to prepare a business, get it to the market, identify the buyer, screen the buyer, set up the negotiations, finalize the transaction, and prepare for closing is between 6 and 18 months. And we try to encourage people to start preparing for the sale of their business 2 to 5 years before they're ready to sell. And one of the things that we found is exactly what you've said, that people wait too long. In fact, and I don't want to close this call on a down note, but the truth of the matter is we've had 2 business owners who waited to list their businesses till it was too late, and both of them died while we were trying to sell their businesses, and have left their widows with businesses to try to run and sell, and it's extraordinarily difficult to do when the principal of the business is no longer in the picture. It devalues the business tremendously. And I want to remind you that this is a one-time event, and so when you're preparing to sell, you want to get the most out of it because it's kind of like the circus ringmaster who is talked to by a guy that said he had a great act for the circus, and he said the ringmaster said, "Well, what kind of act is it?" And the guy said, "Well, I dive off a 150-foot platform into a damp handkerchief." And the ringmaster said, "That's an amazing act. I want that act. What do you charge to do that?" And the guy said, "Well, I charge $1 million." And the ringmaster said, "Well, why do you charge so much?" The guy said, "Well, I can't do it but one time." And Mr. Business Owner, you got one chance to do this right. Let's get you paid for it. Lee, can we add anything else?
Carl, you did excellent. David, you guys did a great job. And the one interesting thing about, as you mentioned, it's a one-time experience. The business owners have not been through that previously, so they can always use some assistance with that process. You guys have really provided some great insights to the business owners on the call today, and I'll remind them that they can request additional information on the topic when they go to info@securetransition.com. Email us at info@securetransitionsingular.com and get some questions answered. And also go back to this call and go over the information again. Use the same phone number access code that they use to listen to the replay. So thank you, Carl and David. Thank you, business owners who've joined us today, and have a great day. Thanks for joining us. Bye.